In this video, I'm going to talk why most traders miss perfect swing trades and why patience is so important and your mindset is even more important when you trade stocks, cryptos, or Forex. It doesn't really matter. This is a Tesla time frame, and this is, I believe, the third or the fourth update I've done on my YouTube channel and also for Certain Focus Online Trading Academy. Well, there I am updating the charts more often, but this video I'm going to talk about why most traders miss perfect trades, and we're going to talk about supply and demand imbalances as always. So I welcome you back to my channel, and in today's supply and demand update, as you already know, I'm going to talk about Tesla stock and Elon Musk, and this is I'm going to talk about the most emotional and frustrating things in trading, and that is missing a perfect trade by just a few cents, and also holding perfect trades like this one on the monthly for weeks and months, and well, taking advantage of dividends and everything. So I believe that you know what I'm talking about. I analyzed this a few weeks ago, a few times. So why do we miss trades? Well, first of all, because probably if you're not trading the bigger time frames, you are missing this imbalance in the monthly. So you did not set your alert, you didn't plan your trade, because that's what we usually do. We set the alert, we plan our trade, and then we wait until the trade is triggered. We wait like disciplined, sane swing traders that we should be, but sometimes price barely misses your entry, as we're going to talk in the daily time frame. But we're still holding this position on Tesla. So the month is in a clear uptrend, and as I explained in previous analysis, price rallied strongly, large impulse, and then we were waiting for price to drop there. It dropped there in March 2025, and it's been like almost 6 months rallying, and we're expecting this on Tesla, probably all-time highs too. So this is the monthly time frame. I'm going to deep dive into Tesla stock, as I said, and why the monthly and the weekly time frames, we've got an imbalance here too. And now even the daily demands are in control. Well, the daily demand fell short of it. We're going to talk about it when we reach the daily time frame. So this is a perfect sample of why patience and price action mastery are your greatest weapons, let's say, in the stock market. Strong impulse, we must wait. Now price has started to rally for 6 months. Very strong, large candlestick body on the monthly. That tells us that there are lots of institutional traders down there, because these markets are not moved by individual traders like us. So let's break it down from the top down, starting with the monthly time frame, then the weekly, and then finally the daily imbalance that really, well, nearly gave us a textbook entry, but it just fell short. So this monthly demand level, I'm going to delete the weekly demand level. I always use the Fibonacci tool to extend the rectangle and see the price levels there. This is the only use I give to the Fibonacci extension. I don't use Fibonacci extensions. I don't need them. I only need imbalances. I don't need news. I don't need any events, anything. Just supply and demand imbalances with raw charts, no indicators, no oscillators, nothing, as you already know. So this imbalance at 273 was reached in March 2025, and that zone was identified weeks and months before it was reached. Okay, and this wasn't a guess. This wasn't based on what Elon Musk had for breakfast. This was a clean, powerful institutional imbalance, a demand level, and when price reached that area, it dropped. I made an analysis there and deleted it and said, somebody asked and said, oh, we're expecting, it was not yet the moment to buy. So price dropped there. We thought that it was going to be eliminated, because as you can see, Tesla monthly low was at $216.97. Then it even printing another low, almost eliminated the imbalance, and then suddenly it rallied, because we still have the imbalance in control. This is not support with a line like this. This is a demand level, and it is comprised by this proximal line at $273 per share and the distal line at $202 $12. So our entry should be here or around there, our stop loss underneath. Okay, so like I said, this wasn't a guess, it was a strong institutional demand imbalance. So what happened next? Well, exactly what we expected. Price started to rally, and it's been doing that for 6 months, almost half a year. So price pulled back, respected the level, and began to form a sequence of bullish candlesticks, as you can see, although this one is not bullish over here, this black one. That, remember, I always said these bigger time frame imbalances aren't just technical areas that you do with your stock technical analysis. They are where serious money steps in, okay? And then you see the result. What happens when serious money, smart money steps in? That's where swing trades are born, in long-term, monthly, weekly, and daily imbalances, so you can hold the position for days, weeks, even months. And we can predict these movements with a high degree of accuracy. And most traders ignore the monthly time frame, the chart. They also ignore the weekly time frame because that's like science fiction to them, because it's too slow, blah blah blah. They don't have enough money. But yes, you can trade options, you can trade CFDs with higher leverage. It is possible, okay? And maybe Tesla is too expensive for you, but there are hundreds of stocks that are not trading at $340 per share. Maybe at $20, $25, $50, even $100 and $100 per share, and you can allow that. Okay, because now with fractional trading, you can buy one single share of Tesla or Netflix or Google or Microsoft stock. Okay, so then when price starts to rally, these 4-5 candles on the weekly time frame are these bullish candlestick on the monthly. So when price rallies like that, it creates another demand level on the weekly time frame, which is located at $294. So price rallies, you can see how we have indecision candles over there, and then we wait for price to drop that level, and then I recorded another video when price was there, and it's been playing out ever since. The demand level on the weekly time frame at $294 per share on Tesla has been playing out, and it held 2 retests. So when price reaches that imbalance, what do we call? This is like nested imbalance, like at the proximal line, a stuck imbalance at the proximal line of the monthly time frame, which is there, which is even better. Okay, so when both monthly and weekly demand levels, the monthly is over here and the weekly demand levels is over there, when both align, it's like getting 2 green lights in a row from the market gods. There are no gods up there in the markets. It's everything manipulated, but you know what I mean. So when these imbalances gain control, you can use smaller time frame strategies and imbalances or other strategies using indicators oscillators to take advantage of these bigger time frame imbalances and do shorter term swing trades or scalp or intraday stock trading using other stock trading strategies for intraday and short term. And you can take advantage of these rallies, okay, using those smaller time frames and other strategies. Supply and demand is just one of the many strategies to trade stocks that work. I mean, there are hundreds. You just have to focus on a single one and master it. But most traders, they start trading with a strategy and then add another one. Okay, this one doesn't work. But they do work. You just have to be consistent. And that's the problem with most traders, that they are not consistent, applying the rules, they start following others, and they add the emotions to the mixture, and then, well, they blow up their accounts. So same happened here. Price bounces from this weekly demand level at $294 for Tesla stock, and we've seen continuation of these bullish candlestick patterns. Price action is crucial. It goes hand in hand with supply and demand, with clean impulses, okay, and momentum candles. So swing traders who got at this level, they should be happy about it. Okay, you should be smiling right now. Okay, and if you are still sitting on the sidelines, that's okay. I mean, this brings us to the most recent setup for Tesla, which was this one precisely. Okay, So this is a demand level on the daily time frame, located slightly higher than the weekly time frame. The weekly time frame for Tesla was at $294, and this one is at $324, like about almost 10% higher. So what happens? Strong impulse made of several consecutive large candlestick patterns. Nothing to do with this pattern here or this pattern here. If you compare pattern number one, candlestick formations, number one, number two, and number three, it is very clear that this is much stronger. The candlesticks are much wider, the bodies, okay? Here, there's only one bullish candlestick, or another one, but followed by a black one, a bearish one. Here we have like candles that do not have large candlestick bodies. So out of these three, this is the one that looks good for Tesla. We had the alert there, but it fell short by, well, cents. Okay, and that's why I'm talking about falling. This trade fell shy of retracing to this demand level on Tesla over there. But the weekly demand level here is playing out, and the monthly demand level here is playing out, and we're expecting this. So on this daily time frame, we waited for the pullback. It just didn't happen. You could even have, I don't know, whispered sweet things to the chart to push it. Well, that doesn't work like that. I mean, it's money, institutional money, that moves these markets. So you could have said, oh, come on, just tap it, pull back down there, just a little bit more, a little weak. It just didn't happen. And now with the pre-market, it's 10 a.m. in the morning, Friday the 5th of September. And well, we have a pre-gap, okay, a gap in the pre-market of almost 1%. So I doubt this is going to happen anytime soon. So the position on the weekly and the monthly are playing out. So, but price on the daily, I mean, fell short by a few cents. And this is classic. Sometimes it just doesn't work. I mean, it just doesn't play out. It doesn't give us that pullback that we need. And sometimes it just doesn't work. I mean, this is trading. You just need to take the risk, and sometimes it's going to work and sometimes it's not. Okay, that's trading. You just kind of have a strategy that is 100% efficient. Okay, so this is where most traders panic. Usually they chase the move, they cry, they switch to the 5-minute time frames and say, wow, try to scalp it back and end up blowing their account, okay, on a random stock movement. Okay, in this case it just rallied. Okay, you can use maybe EMA crosses or Bollinger Bands or other indicators, okay, that could tell you, okay, it fell short, retracing down there. It would have been better, obviously, that the demand level on Tesla at $324 would have been reached, but you can opt for that using the smaller time frames. I'm not doing that. I'm just waiting. If I miss the trade, no problem, because I did not miss the weekly demand level and I did not miss the monthly demand level. So I missed the daily imbalance on Tesla. Well, no problem. That happens a lot. So I suggest that you don't become that type of trader that chases the trades. Okay. So here is the, let's call it like the mindset shift. Okay. If the imbalance doesn't get hit, the opportunity isn't invalid. It's just not ready. That's it. It wasn't for us. Maybe Microsoft did, or Netflix, or the Eurodollar, or Bitcoin. Like right now, Bitcoin is reacting to the weekly demand level there. I haven't done the update. It's trying to rally. So we need to be patient. Okay. So we wait. We stay mechanical. We let the market come to us. If it doesn't, no problem. Okay, we swing trade the stock market like professionals, not emotional ping pong balls. So we need to wait. Sometimes we miss, sometimes we win, sometimes we lose. But using supply and demand, you will win more than you lose. Well, missing trades, it just happens on all the strategies. Okay, so let me be clear. I mean, here, these imbalances aren't just for swing trading. If you are an intraday trader and you are expecting price, imagine that this level has gained control. It's a little bit wider, okay? And you draw it like this. It's not the right way, but imagine that this happens. So this imbalance on the daily time frame at $329 per share, it is for swing trading, and you can use, as an intraday trader, you can use the daily and 4-hour imbalances as their directional bias, and we've got an uptrend here, okay? Uptrend on the daily. And then if you're a short-term trader, you could have planned lower time frame entries at these higher time frame demand levels and zones. So you can use the 4-hour, 1 hour, 15-minute. Now that you know that it is in control, I mean, we are assuming that this gained control, okay? It didn't, but imagine that, okay? I'm just talking about that. So supply and demand is universal. I mean, you don't need indicators, you don't need any reports, any earnings reports, no breaking news. It doesn't really matter. Whatever happens in the news is already priced in, unless you are trading the 1 minute time frame, just scalping Tesla, then it's okay. You ignore the news. You don't trade prior, during, or after the news. You wait for the storm to pass. We just use price action imbalances like this one on the daily, the weekly, and the monthly time frames, and just use patience and the right mindset. So Tesla still has a bullish trend guided by this monthly demand level here, then followed by the weekly demand level at $294, and then Tesla created another demand level there. I'm just summarizing the analysis that was not reached by a few cents. So now we've got that daily demand at $324, and we are probably almost begging to get filled, but I don't think this is going to happen because of the pre-market gap, bullish gap that we have. So don't be the trader that panics because of that, because of a few cents. I mean, Tesla was missed, but trade was missed by a few cents. Be the trader, become the trader that waits, the one that plans, the one that wins. And hopefully we'll continue to rally and give us other opportunities. And if you are holding this position from the monthly and the weekly, congratulations to you. If you found this analysis helpful, hit that like button at the bottom of the video, subscribe, and comment below. Have a great day.